So I recently moved to Canada and I'm looking to start investing in the Canadian stock exchange, right? And in order to do that, I've actually had to learn about TFSAs, RRSPs, tax efficiencies, how best to put money where and whatnot, right? So this isn't financial advice, right? This is just how I plan to do what I want to do this year and how I'm hoping it can be maybe a lesson for someone. I don't know. I'm open to advice from people who have been doing this a lot longer than I have, right? The first thing I do want to say is I have noticed that in the Canadian market, people are not really big on individual stocks. It's a very ETF heavy market, and like as you already know, like ETFs already just hold a bunch of different stocks and give you like that diversification option. So that's like the first thing. More on that in a bit, really. But I do hope to invest $1,000, mostly because that would allow me to scale it a lot easier, right? Because $1,000 you could just scale that to 2,000 or 5,000 depending on my income as that grows or increases or reduces or whatever. It also gives me an opportunity to learn in this market, right? And most importantly, I think it's a simple enough amount to start with as a goal that at least I can get the dopamine of hitting that goal and saying, you know, this was a good year and we can actually build on that. So how do I plan to do this? Mostly my $1,000 investment, right? I do plan to have it like 60% in ETFs, 20% in REITs, which are real estate investment trusts, more on that in a bit, and 20% in individual stocks. Just two names on the individual stock side though. So that gives me like a bit more diversification, lower risk, and at least I can have a manageable learning curve, right? Now on the ETF bucket, as I mentioned, just $600 throughout the year, which brings me to roughly $50 a month, which is it's something, right? But the thing with the ETFs that I have noticed is the first one I'm going to talk about is I'm going for VCN. And the reason I'm going for that is because I actually had to look at a lot of ETFs before I came to this. So I had to look at like VCN, VAV, VOO, XEQT, VDY, XUU. There's just a lot. Like the market is full of ETFs, right? But I went for VCN mostly because at least it tracks the entire Canadian market, right? And then it also gives me diversified, exposure because at least with that, it's sort of like you track the whole Canadian market, which actually had a very good year last year, mostly driven by banks and precious metals, but and the energy sector, right? But at the end of the day, it was still a good performance last year, right? And then there's a little bit of low cost fees, and also like I think being in Canada, it's a good portfolio anchor. The next one I'm going for is VFV. I'm going for VFV mostly because at least here I still need to track the American markets. And instead of buying VOO, which I learned would actually have more tax implications and fee implications, I have to buy VFV, which essentially just is an ETF that covers the VOO. So like the Canadian version of the VOO is quite interesting, but yeah. The everything that the VOO tracks, which is the Vanguard Index, blah blah blah, tracks like the top 500 companies and all that kind of stuff. And it wasn't bad last year. I think it had like a 10% growth last year. So it offers me like diversification into the American markets, right? Now on the REIT side, 20% of the portfolio is going into REITs, and that is going to be because in the short term, it might not make that much sense in terms of payouts, but in the long term, it surely would. It offers me a different diversification into like the real estate sector, and then it's sort of like a hedge against inflation. Yeah, it's sort of like a hedge against inflation. So the one I'm actually going for again, after much research, I'm going for BMO equal weights, blah blah blah. Basically, ticker ZRE. The reason for this is because if you look through the ZRE components, right, it has like 10 different 10 different REITs that actually make up the 50% of the investment, right? It's a bit technical. I'm trying not to be technical in this like video, right? But yeah, it has like equal weighted Canadian REITs, right? Which instead of, think of it like ETFs, instead of buying one REIT, I have to now buy a REIT that covers multiple REITs, which sort of gives me a hedge of safety. That's my logic, anyways, right? And it wasn't bad last year. It had a 6% performance, like full year last year, which I think wasn't bad. And apparently, there's a 4% yield on it, something like that. So essentially, if I were to put $100 into that, I get $4 at the end of the year, which I don't think is bad, right? So it's a start. $200 goes into that this year. And individual stocks, I'm going into RBC. And the reason I went for RBC is because, I mean, Canada is like Nigeria in the sense of the big banks are like the major movers of like the market kind of thing. And I think there are like big six banks in Canada, but I'm going for RBC because I think it's like the market leader. I think they have, at some point, apparently, RBC was the largest employer of labor in Canada, so that says a lot, right? And then they have good earning stability. I think they're up 34% in 2025, which was not too bad. So I'm putting $100 into that. And this might not make sense particularly, but I use RBC, so I mean, it's easier to monitor their performance, again, because of the learning curve I'm talking about. And then the second stock I'm going for is more something defensive, right? And this one took a while to get to, mostly because I had to compare between like waste management, railroads, and what I eventually went for, which is the telecom sector, because I wanted something that would allow me to sleep well at night, right? And these three sectors are things that, regardless of how the world works, they sort of would always have demand. Most of the companies in there are already sort of like at like a mature stage. You're not really going to see many new players coming into these sectors, right? So I went for Bell again because, I mean, technology, data, everybody needs to call, use the internet, do whatever, whatever, right? They have good recurring cash flows, right? A bit on the financial technical side, right? They have a higher barrier to entry, really, because in telecoms you can't just wake up and really start yours. It's sort of higher. It's quite expensive to get into. It has a relatively high dividend yield, although I did notice like there's like a dividend growth trap with Bell, with BCE rather, as it's called. And I think that might be something I would also have to learn a little bit more as we go on. So yeah, I'm going to dedicate $100 into that this year. Let's see how that goes. And basically, the idea for this year is going to be like 30%, which is $300 into VCN, 30% into VFV, again to give me the American safety net. ZRE, I'm going to put $200 throughout the year, which is roughly $17 a month. That's my only REIT, and hopefully in 5 to 10 years, the money I get from that monthly might actually start to make sense. Like I said, RBC for my individual stocks and BCE as my sort of sleep well defensive kind of stock. And that essentially gives me like a low risk ish portfolio, heavily diversified, and it allows me to learn a lot more this year as I like, pay attention to the markets and stuff like that. And altogether, that should give me $1,000. So if I'm lucky enough and I'm able to hit that in 6 months, then again, it's something scalable. I can just double the amount I put in monthly and I would be good to go. So yeah, the target portfolio, this is what it should look like at the end of the day. I don't know. I really, like I said, I'm trying to learn more about the Canadian market. So if you have any tips on TFSAs, RRSPs, where I should best put my investment, and I've been learning a lot about what platforms to actually use because everybody has different fees and stuff like that. I'm more leaning towards, should I not say? I don't know. I'm actually leaning towards using the wealthsimple app. I've been told like it's a lot better, and then I guess because I could also do fractional trades as well, so that gives me like the ability to, like I mentioned before, invest something as little as just $17 in a particular financial instrument. But I don't know. Let me know what you guys think. Let me know what ETFs you guys are holding. Let me know what is in your portfolio, or what more research you think I should be doing before taking a stand. I asked someone and they said like, you could just start with just one ETF instead of two, but I don't know. Like I said, this isn't financial advice. This is just why I'm doing what I want to do. And hopefully by December this year, I could have $1,000 in the Canadian stock market, and that should be a good enough start. So yeah, let me know what you guys are doing, how you're doing it, and what tips you would have for a beginner in this space, because I feel like a lot of people on the internet just tell you how to do what they've done, or why they just tell you what they've done already. But it'd be good to just have someone who can just give me tips along the way and stuff like that. So yeah, this is the first of many, and I'll catch you guys in future maybe portfolio update videos.